Hello, Warriors. How's everyone doing today? Doing all right? Okay. Who's in the house? Hi, Sinatra. Alexander, how are you? Richard Adams, welcome back. You could inhale now. Jays, nice to meet you. Hugo, NG. Blake Morrow, good morning to you. Your name sounds familiar. And Malia Vance, that's a new name. Hello, Malia. Jeff Hansen, how you doing? Becky, good morning to you. Okay, everyone see my screen, 15-minute NASDAQ. A little stronger today. Again, a lot of confluence coming in here. We're, I guess if you put a gun to my head, people would say, well, we're going to rally to new highs one more time. We're diverging on a daily basis. Doesn't mean, a little bit under the weather, a cold or COVID or. Hi, Ryan.
Hey, Dale.
How are you, buddy?
Yeah, not too bad, mate. You feeling a bit under the weather still?
Yeah, all week. Yeah, started last weekend. But you know what? The show must go on.
Yeah,
exactly. All right, so we have PPI in 30 minutes. Okay. So if you can see this, I mean, it's glaring. And it's not just one divergence, it's a couple. This was the first one under 70. And actually, the NASDAQ could rally one more time and not confirm. Okay, it could. A lot of people had targets at 15,350. We got to 180. So, that's possible. S&Ps are, probing new highs here. Almost every time frame is non-confirmation except the 15-minute. And these highs that we had last night did not take out the high from yesterday. So I don't believe we have a new high there yet. The euro tried to close over 17 and a half yesterday. I felt that was important. And, it could. This would make it a false breakdown. I think it opens the door for 119, 120 if we get a turn here. Dixie could be, this was a pretty negative candle. Maybe we're on our way back. And also the yen, same scenario. We could at least correct this. But, even though we had that soft number on the CPI yesterday, look at yields. They're very tough, aren't they? So they gave some back here, Ryan, like you said yesterday. They give up on a benign number, give up some, but it sure wasn't enough to turn it. So
no.
Go ahead, buddy.
Sorry, mate. We just seem to be in sort of what next mode. We had those highs before the CPI. Then we had the CPI. I don't know what the market got into its head yesterday, because obviously the dollar sold off on what was not bearish numbers at all, but right, they dipped as expected. It wasn't a big miss that people were expecting.
No.
And we saw the dollar off, and it was like, what's going on there? And I think the yields themselves are sort of finding a what now mode. Are they going to break up higher? Are they going to hold 130? And we're just in this plane of let's see what happens next.
Yeah, I think we're just consolidating another, really kind of powerful move. Maybe we pull back again, like you say, form some type of bull flag for continuation. If we get equality from here, just equality, say we start, taking out the highs, it's going to take us into the 150s.
Yeah,
and
exactly.
148's very important. It's been a real important pivot, as you can see, right back here and here. So I think there'll be a bit of a battleground here. But there was a Fed official on CNBC, pretty long interview, Kaplan, I believe. And, he's in favor of beginning the taper right now. He actually used the metaphor of a doctor using medicine, that the side effects were worse than the treatment, that it's not good treatment. and anymore. And he wants to start the taper right away. Says, there's no need. It's inefficient, ineffective medicine right now.
Yeah, I don't
So
disagree.
he's one of the hawks. So I think Steve Leisman was interviewing him, and he said, I'm sure there'll be a debate, but that's where I stand. And, part of our mandate is also, not to let prices get out of hand, which is hurting the middle class, lower class more, paying higher prices for everything. I mean, there's even, we were talking about for a year or so now, the crazy real estate market as far as purchases of homes, but now even rentals, there's bidding wars on rentals now. That's how it's become, because people can't, find a house or afford it. Now there are bidding wars on rentals here in the US.
It's the same over here, Dale. It's bonkers. You've got 150 people going for the same house.
Yeah,
it's not
yeah,
even hitting the websites. It hits
yeah,
an agent's website, and then before it hits sort of like the national websites, it's gone.
yeah,
And people are taking houses without viewing them. They're
yeah.
it's such in deal. What is that? Is that people moving out the big cities, to get away from the virus, that sort of thing? There's lots of reasons, but it's a bonkers market at the moment.
Yeah. Yeah. So, we do have some of the economically sensitive commodities not acting that great, Ryan. I mean, look at the bounce in oil we had from the same level a few weeks ago. That was pretty powerful, the first candle off it. But look, after 1, 2, 3, 4, we barely rallied halfway back of this decline. So I don't know what's going on in oil, but it's acting heavy, and we start taking out this level 65. You're looking at mid 50 handle. So
Yeah, I agree.
yeah, and copper was a star, right? I mean, it was performed as well or better than precious metals, and look at how weak this little rally is. In fact, we're coming close to attacking major support here at 420. Under 420, you have a breakdown. So the economically sensitive commodities are also taking a hit. So it wasn't just gold, which trying to fight its way back, and silver. And Blake said it. Oh yeah, the White House is telling OPEC to increase production. Um, that you didn't have to be in a rush to buy gold, because gold is acting better. You could tell by the gold silver ratio; it's outperforming silver. But gold could retest these lows. Silver could take them out. Silver looks kind of sick to me. So that's all I have. We have a new guest today. Believe he was a floor trader in Chicago. Has his own show. His name's Steve Miller. His handle is Ask Slim. So always look forward to bringing in new people to interview. So that should be interesting at the bottom of the hour. And with the markets being kind of dull, I'll leave it to you guys to find something to talk about for about 22 minutes. Blake, I'm sure has some ideas here to share with
It'll
us.
take all that time up.
Go ahead, Blake. He's gonna ignore me. How about Steve Volge?
Good morning. Good morning.
Let's bring Steve Volge in. Steve. Hi, Steve. Everyone misses hearing Steve, Blake.
I'm more than happy to let Steve go, but I don't want to say good morning to everybody.
Okay.
I have to say that man, I'll tell you, it's a snooze market today. I'm actually surprised that we didn't get as much of a reaction yesterday, and it's not because the data was out of control and a big like some big outsized numbers, what the word I was looking for at 5 o'clock in the morning for me. It wasn't some sort of outsized number. I think the market was pretty positioned for some stronger CPI data, hence the being long the dollar and the euro being so close to 117. It's like, okay, we get some pretty big data. If we get a nice outsized hot beat with CPI, the euro would have cleared the 117 level, and I think people wanted to be positioned for that ahead of the news. Didn't happen. We got the euro back at 117.50, but we're stalling there, and I'm surprised that the gold can't even get above 17.55. So that's all I really wanted to say, and I wanted to open it up to Ryan and Steve, who's just said hello. So what do you guys think about yesterday's data?
Go on, Steve. I'll let you get your word in.
Oh, go on, Ryan.
Well, as I said to Dale a minute ago, it was a strange move after the CPI, because it was a large enough miss on the month by month number, but year on year it was well within range. In effect, it confirmed that inflation is still there, and even some of the big ticket or the big items that people are looking at, such as the used car market, that dropped from, I think it was 10.2% to 0.2%, and so that showed that some of these temporary factors, transitory factors, are washing out, but it still couldn't knock inflation meaningfully lower. So the trend, I think, still remains, and it was a surprise to see the dollar get sold off. I was quite happy because I picked up, I was long euro dollar, as I said, into 1700 yesterday. I picked up some dollar CAD sub 125, and I was happy to see it reverse. And one of those times you just got to try to fade. Yields dumped down, as I said, to near 130. They back up again, mucking around 135, 136 in tens at the moment. So definitely the picture hasn't changed, and we'll see what PPI brings and answer the question.
Yeah, and that's interesting that you bring that up, and I want to say that I used that yesterday as an opportunity as well to sell the Aussie dollar as we were we were in the 73.80s. If you guys don't know, I mean, this is my view of the Aussie, and it has been my view for a long time. We're in a big bear flag pattern, and we're developing the flag. We have been for weeks, and you might go, oh man, the Aussie hasn't moved anywhere. Yeah, I know it hasn't moved anywhere. And the fact of the matter is it hasn't moved anywhere, even with stocks at all-time highs. So when you have an asset like the Aussie dollar, or a currency that is really, typically these commodity currencies tend to act so much better when you have a quote unquote risk on environment. When you have the Aussie grossly underperforming the markets right now, just like it was, you could have the same argument, which we had the exact same argument back in May. Before we broke down, it couldn't rally as we were hitting new highs. Same situation here. The Aussie can't rally. Now you can obviously point to, the lockdowns in Melbourne and, different parts of Australia or whatever. But the fact of the matter is the Aussie just is a really underperforming currency. And it was interesting to hear, my guest on Trader Summit yesterday also reference it as well. And I had just entered an Aussie short before he mentioned it, on air yesterday in an interview. But man, that I use that as an opportunity, just like you did, Ryan. It's like, okay, well, did it change the picture? Did the inflation data change the picture of the dollar? Not in my view. So, Steve, what do you have to say about the inflation data that we got yesterday? I know. Wait, let me guess. The Fed doesn't look at inflation correctly.
What do you mean doesn't look at inflation correctly?
I'm just kidding.
Doesn't measure it correctly.
They don't measure it correctly.
That's the only sure thing.
Okay, all right. So how do you feel about the data that we got yesterday and price action that we're seeing in the markets right now?
I think that practically changes nothing, and not to market participants, but practically changes nothing. We still have inflation being comfortably more than 2 times above the supposed targeted inflation. A pullback makes sense, but we're still way above target. And I think we're going to remain way above target. There is no obvious political will to change anything in the approach of the policies that actually create inflation. I do think that the Fed is not going to end up reacting as strongly as needed. So the eventual path forward having to do with real rates will remain them being very negative.
All right. Stelios, I just heard your voice. What are your thoughts here going now? And we got the whole crew is here now. What are your thoughts regarding yesterday's data?
Well, unfortunately, I don't have anything new to say. I still think that I agree that inflation is going to remain higher than probably the Fed expects. They have actually given us kind of a rough timeline. A couple of the Fed members said that, by the final quarter of this year, we expect inflation to be going down. So, when alarm bells will be ringing, that is if we get to, say, October, November, and inflation is still high and it's not coming down. But at the moment, the market's buying this transitory story. Nothing's changed. I mean, the prints are on the high side, relatively on the high side. You'll get the odd miss, here and there, but overall, they're very high. So I think we just go from one event to the next one being Jackson Hole, and then the next one being the other FOMC and the jobs reports, the usual. So I think August, unfortunately, is going to continue to be a grind. And with no clear direction. I hope I'm wrong, because we really want some volatility. But as we said yesterday, I think metals are still underperforming massively. And I am a metals bull, but I'm not getting long at these levels. I'm still waiting. The reaction has been very poor. And I still think that we're going to see 16-18 gold and mid 22s in silver probably. So that's kind of my targets at the moment, and I'm waiting.
Okay, well, I'm gonna go into like a little bit more detailed technical analysis in gold, and I'm gonna talk about that here in a minute. But I do want to mention, and I'm gonna get Ryan's opinion here about the sterling. So yesterday, if you were listening pre CPI data, I'm like, hey, if the dollar weakens, I'm going to play this sterling to the long side. So I did. I bought it, just a quick scalp yesterday. I bought it, I think, right above the 138.40 level, right around here. And I took it for like 14 or 15 pips, just because I was getting off of this webinar, going into the other chat room, trying to update things as the market was moving. I should have stuck with it a little bit longer. I didn't, though. I just pulled a quick few dollars out of it. But we're still trading in this flag pattern. And I was actually, when I got up this morning, I was thinking, when I wake up, everything happens. It seems like everything happens when I'm sleeping, during the European session. So I figured when I got up this morning, we would have cleared 139 and we'd been on our way to 140. So I would thought the bull flag was going to start playing out. Now, the reason why I've been looking at that is, we had this false breakdown, double top, if you think about this from, a month ago, double top, broke through, cleared support, cleared this old double bottom. Then we had a false breakdown. I actually got caught short this last three weeks ago, maybe. I think I lost money right here. I think I shorted it here, put my stops, somewhere up here, and I took it for a loss. And I figured, that false breakdown, great. Now we can play it as on the bullish side. So I've been targeting the sterling, on the long side. But when I got up this morning,
when does this bull flag become too elongated to no longer qualify as a flag?
That's a good question. And for me, it's when this flag piece, when it exceeds more than 50% of the flag pull. So we're there. We're pretty much there. I mean, I'm at the point where it's got to break now. It's now or never or soon. Okay. You know what I mean?
I thought you were going to say that. Yeah. So that's a great rule.
It's a good question, and it's not like, oh, well, we're at 51%, can't play it on the long side anymore. But it starts to once you get past the 50% mark, like we are right now, if you took the distance of this flag, you took the distance of this flag here, and then you shit, I didn't mean to do that, and then you take this and say, okay, that's more than 50% of the pull. Then it becomes a little bit more risky. And then, the chances of it not playing out become higher. That's always been my rule of thumb as a technician. So, but we are getting close. I mean, and so I guess the question I want to throw it to Ryan, what do you, this Aussie is such a piece of garbage. Well, I'm short, so I'm just saying it trades like a piece of garbage. But Ryan, what are your thoughts here with the sterling?
Yeah, I mean, you know, I'm not one personally for bull flags, but I get what you're saying. I understand them. So on that basis, just the quick technicals. If it goes on too long, you just play it as a channel, you know, because the level's still there. If it's respecting the lines, just keep playing it as a channel until the tops or bottoms either hit, you know, close support, like you've got marked down there, the sort of that area, you know, just under 137.50. If your channel gets all the way down there, then perhaps you've got a bit more gumption to go long into that area. But overall, for the pound, you know, even here the vol's dropping. You know, my gauge is the 1 month at the money vols, and we're down below 6%. You know, 5.7% at the moment, and anything below 6% is getting into pretty quiet territory. So I'm not expecting anything massive from this pair at the moment. I think we're well into summer markets.
Yeah,
but like you say, just, you know, I'm one for just playing the ranges. So if you get down to a decent support level, you know, be it your channel, your flag, whatever you want to look at, then you just play it, and there's no need to risk a fortune on it. Keep a stop tight if it breaks, and if it holds, then off you go, and you just try and have some patience and try and push the trade as far as it goes. Sort of the next resistance level.
Oh, you're breaking up a little bit, Ryan, but I just
sorry, Black.
No problem. So I'm just, you know, and I agree with you. You got to kind of play the ranges, and I can't get long unless it gets above this resistance, which is basically 139. And you know, with the dollar, I mean, you know, you look at the euro, and you know, everybody should know this, and this is really key. And I'm going to reiterate, if you missed the show yesterday, and you haven't been listening up, you know, maybe in recent days, this euro dollar, the reason why this 117 level is so critical, it is the 2020 low to the 2021 January 2021 high, 38% retracement. We clear 117, I think we're going to be seeing a lot lower levels, which, just so you guys all know, my longer term point of view is I really want to be long the euro down at anywhere between 115 to 113. I mean, this is a multi-decade or a decade-long trend line here that I really would love to play it on the long side. But the way the dollar's acting right now, it realistically, it feels like we're going to break lower at some point. You know, all we need is a little bit of risk off. You sprinkle in a little bit of risk off in this market, and you might get some dollar strength. Now, I did want to cover gold really fast, because gold, you know, Stelios you're out here, you know, touting, I'm a bull, but gold's going to go down lower. I'm just kidding, Stelios. I like to give him a hard time a little bit here, but he said, you know, it could, yeah. And by the way, I think I'm with Stelios here, but also I believe Steve probably feels pretty much the same way about precious metals. I'm a bull longer term, but near term, it does look like we can continue to correct. But here's the way I was looking at gold, and I want to show you guys this. First of all, while we stay below 1750, I have a real difficult time being on the long side of gold. I do think that if we get above 1755, we could actually squeeze higher. I think we could get a continued squeeze higher. But I believe that we're playing out an AB equals CD type of move here, which would take us, as Stelios just pointed out, to 1680. I actually think it could take us right through that support. And if we should break through this support, it's going to trigger all sorts of stops. It's going to get everybody else short. It's going to crush anybody who's long. Their stops are all going to get taken. And if we could get just below those lows and then reverse back above 1680, I would get long on a false breakdown. So I'm just going to say that if and I'm not, other than being long physical, I'm not like tactically trading it right now. But if we can just take out a brand new low in gold in the coming weeks, I want to be long somewhere down here. And that's the way I'm trying to play it. But that's just we'll see if it happens. In my mind as a trader, I think of things that I want to happen. They don't happen that way more times than not, but I try to plan out my trade or my idea. And if my plan comes to fruition, I will trade it. So, hey guys, we're about a few minutes outside of producer prices. Anything going on? Anything that you're looking at in particular? Ryan, Stelios, Steve, Dale, anything that sticks out before we have data that comes out?
Not
Yeah,
really,
I mean,
but I have to tell you that I wouldn't be surprised if the PPI data doesn't pull back as much as the CPI data. I can tell you that much.
Why do you say that?
I'm saying that because I still think that the underlying problem is there and it's pretty serious.
Okay. Good. So you think that inflation is going to be still running rather hot on a producer level, still making
I
its
think
way
it's
to the
very
consumer?
likely. I can't guess the data, but I think it's extremely likely. Yes.
Good. Okay. Stelios, I heard you perk up. What's on your mind?
That was Ryan, but
Oh, well, hey Dale. So what did you just say? I'm just kidding, Stelios.
I don't have anything else. I'm still looking at bonds, and I really want to short them, but I'm waiting for them to get to my level. I know you have shorted them already, but
people who buy headlines sell newspapers tomorrow.
Yeah.
So just, in regards to boons and, for if you guys feel that yields are going to start rallying, globally, I'm in that camp too. We have the boon pattern in play here for the 618 fib. That's from last week. We hit not only the 618, this is the golden fib retracement, if you will, but also a confluence of an 88% retracement. And this is also horizontal resistance. So there's a triple confluence of resistance right here last week. And so as you can see, we've rejected it.
Loans look stronger than the notes.
They are.
Yes.
They definitely
a lot
are.
stronger,
Yeah.
different pattern. Yeah.
They are. And I'm sorry, Ryan, I didn't mean to interrupt you. What else are you looking at here?
No problem. Hopefully I'm not cracking up still.
You are still a little bit. Are you in the bathroom?
I wish. I don't know what's going on. I've got nothing open but Zoom. I've got 45 megabyte download and 20 upload. I don't know what's going on with this Zoom stuff. I have to move on to another machine. But anyway, CAD is my one I'm looking at because I'm a bit long. I don't want to see it back up over 125.50 and you get a strong PPI one.
Okay, I missed what you said, but hey, I want to say, Ryan, great job the last couple of days because prior to CPI data, I think on Tuesday, he was playing. If you were in the chat room, in the Forex Analytix chat room, specifically in the trades room where we we post like what we're long or short or whatever. He was in the trades room on Tuesday, putting bids in the euro dollar, at this 117 like 10 level, playing it on the long side ahead of the data because he's like, well, pre-data it's not going to break down, and he was playing it on the long side. So well done on you, Ryan. So we're about how far out are we from data?
1 minute.
One minute.
1 minute. So if you guys are Forex Analytix, if you guys are Forex Analytix subscribers, you can open your data flash here. The data flash will give you a real quick read on the data that's coming out. Sorry, Dale, I didn't mean to step on you there. What were you saying?
That the 10-year yield is rallying towards yesterday's highs prior to the number.
Oh, okay. Thank you for that.
3 bips now.
Got it. Thank you for that update. And it's interesting to see yields just continue to firm up. So I think we'd all agree as they probably should anyway. But I still can't figure out why yields dropped like they did last week. It's kind of beyond me. But anyway, data is coming out here in approximately 10 seconds. So stand by, and then after the data comes out, we'll turn it over to Dale for his interview. And Stelios is always so good at announcing.
Oh, it's
the
strong.
major-
It is
Oh,
strong.
look at the PPI.
PPI
What did I tell you?
7.8%. Core PPI year on year 6.2%. That is a big,
PPI
big
7.8% year on year.
Jesus.
Just let that sink in.
Yeah.
Woo!
Transitory.
Yeah.
When is the
Steve-
market going to actually realize that it's not transitory? I don't know.
Yeah. Now, if you think that producers are going to be having their the prices paid increased by 8%, but they're going to eat all that up, yeah, I have a bridge
Well,
to sell you.
their
honestly.
margins
Yeah.
are less than that, so they can't
Hey,
basically.
all right, guys. Hey, thank you so much for all the analysis this morning. Remember, try out Forex Analytix. Join our community. We still have our special pricing up, which we'll be actually removing this weekend, I believe. It's for the merger of Forex Flow Live and Forex Analytix. We'll be taking these prices back to normal prices to take advantage of them while you can. And I want to say if Banxico rate decision is later today, it's at 2 p.m. today. If you want a good write up on Banxico or some flair on it, read Mark Chandler's post today in Trader Summit. Go to tradersummit.net. This has all the a lot of analysis from a lot of analysts every single morning, every single day. So check that out. All right, guys, I'm going to pass it over to you, Dale. Thanks everybody for tuning in. I'll see you guys on the morning edge in about 45 minutes from now.
Thanks,
Good hunting,
everybody.
Blake. Good hunting, team.
That's fine.
Thank
See
you.
ya.
And Steve Miller, welcome to Face. Waiting to hear your voice. Asking you to unmute. I'm a big fan of yours, Steve.
Hey, thank you. Thank you very much.
Are you? Oh, there you are. Okay.
Yeah.
So, yeah, what the heck? I'll put my video on.
Yeah,
So,
what the heck? I want to see what you look like anyway.
all right. So, Steve,
Yeah.
I saw you in concert at the Belly Up in Solana Beach a few years ago. I'm a big fan of
that
yours.
was my twin brother, actually. I
all right.
was born about 3 years before my twin there.
Oh, okay. So, are you from Chicago, Steve?
Yeah, from Chicago, but we moved to Florida about 2 years ago.
Okay. Because I read a little bit about your background and you used to be a floor trader. What floor were you on?
I was on the CBOE mainly, also a member of the Chicago Board of Trade on the Merc.
Okay, maybe I bumped into you at the Sign of the Trader. I used to have a seat at the Merc,
Great.
the old
Yeah.
Merc. Yeah, when it was over Union Station. Remember that?
Right. Yes.
Yeah, the prehistoric days. It's really
Yeah, well,
and you made the transition. You and I had to reinvent ourselves from floor traders and actually have to learn to be right the market instead of just trading the flow of paper, right?
yeah, well, things certainly changed. And I left the floor to be a screen trader in '84. I was actually one of the first ones to do so.
Okay. So how'd you break into the business? What was did you start off with a seed or what? I started as a runner and when they were trading currencies on a chalkboard, Steve, at the CME.
Yeah, well, I started out in the menswear business. I had pants stores in 1970 when I was 20 with a partner, an older partner, and his son worked for us. And when he graduated from Wharton, he decided he was going to buy a seat on the CBOE. And so he did it in late 73, one of the first. And my partner, he says, well, I'm going. And he bought it in 74 in about January. And then I said, you're not leaving me in these stores. So we closed them and sold them. And I bought a seat in May of 74.
Okay. All right. So
47 years.
All right. Yeah. So you and I are kind of like we have one foot in the tar pit, but you can't learn experience, can you, Stephen? I know you mentor people. It can only happen with the passing of time and living through adversity.
That's true. I always tell people that they have to make the same mistake 1,000 times and survive it to be able to be successful.
Yeah, a buddy of mine, I used to, take positions before big numbers and he would say, well, Dale, you love to hear the ice crack. And how many times do you have to get hit in the head with a ball peen hammer to know it hurts? So I'm interested in what you do. You have a financial show as well as your website.
Yeah, we have a team of analysts actually, and we create educational videos and do analytics. And we have 4 different membership levels on our website, AskSlim.com.
Okay. And did you bring anything that you want to talk about market-wise today?
Well, I mean, I have a zillion charts. I mean,
Right.
if you want to see those. And, I hear you guys discussing, I listened in for a couple of days to see what you're talking about. And I hear you guys discussing the dollar market and gold market a lot. So it seems like you will have a lot of focus on that. And we do that. We look at most of the FX spectrum, and of course, gold and silver, the dollar. So we do all of that. Plus, we look at 24 different futures markets, and also more than 400 stocks and ETFs. Wow. So we have all that analysis really available. It's really a matter of, what do you think your greatest interest for your viewers is right now?
Well, the currencies have been pretty quiet. I would say it's probably still the indexes going to new all-time highs, probably yields. I think that what happened last week in yields was fairly significant. And what interests me is your work with cycles. And I've always been interested in cycles. In fact, people call me a lunatic. Because I do see certain patterns arise, and with change of seasons and eclipses and certain things like that. So if we could see a little bit of
sure, I'll show you some of that. Let me just give you a little preliminary on that. And that is that, first of all, we don't really look at lunar cycles or seasonal cycles. What we look at is money flow patterns. It's an observational way to look at the markets. And we do that by analyzing the charts and looking for repeating rhythms in the market. It's like the heartbeat of the market is what we look for.
Like it.
We do that on multiple time frames, and we use the information off of the multiple time frames in order to see what's happened and use that information to project out in the future. And we add into that our proprietary momentum indicators, and what we call swing high, swing low analysis, where we look for zones where we expect to see support, resistance, and do projections. And I can give you some examples of that right now.
Okay, so you do look for inflection points with your work. Isn't it Paul Tudor Jones who says all the big money is made at the turns? Do you believe that?
Yeah, and actually, you want to actually get caught at the turns, because you always want to be as long as the market's going up as you can, and short on the downside. And it's really those people that try to fade the markets that really run into trouble. I'm going to share my screen right now, and what you should be seeing is a chart of the US dollar. Do you see that?
I've got it up there, yes.
Good. Okay, so I just want to give you an example. This would be, a candlestick. I'm looking at a monthly chart right now because there's been conversation about the US dollar, and I've heard some bearishness on the US dollar, and you don't really see much in here when you look at flows. But when I switch over to our monthly work, which is right here, then all of a sudden you see something just screaming out at you. You can see how very different our charts look when you look at that. And what we're looking at here on the bottom are the cyclic harmonics. In other words, these arcs that you're looking for are the measures of money flow. Basically, the bigger ones are the much longer holders, the intermediate ones and the minor ones get smaller and smaller for the shorter term holders. So what you're looking at here in the dollar going back for 20 years is here's where Greenspan killed the dollar right in here because he was trying to save the world all on his own and destroyed the dollar as he brought the interest rates way down. And you can see in here in areas where there is what we call a nesting, when all 3 cycles come down, is when the greatest risk is. And that's those yellow ovals showing you that these are periods where the greatest risk in the market is. When you get into the rising periods where there are 3 cycles moving to the upside, you get money flows that are pushing it up, and you get the greatest upside impulses. And you can see what happened, and I'll just blow this up for you a little bit right here.
So you look for a confluence of the longer term and shorter term cycles coming together.
That is correct. So right in here, what was going on in this period in the middle of 21 was there was a period where there was likely going to be dollar weakness. And we, at this point right over here, we projected that it would be declining into the middle of the year. As a matter of fact, if you look at this chart, I'll just blow this up a little bit more. This up in the top, that gray area, was our projection that we came out with on January 1st, was that the market low for the year would be made between May and July for the dollar index, and that's essentially what we got. So now we're in this period of 3 cycles rising, the minor, the intermediate, and the dominant, and you can see that the dollar has been moving up. That projects dollar strength for quite a long period of time in here, many months going through 22 and potentially even into 23. That's not exactly the greatest background for the precious metals. Though during periods where you could get some softness in the dollar, you could get upside spikes in the metals. So that's basically a little bit of a primer on what cycle analysis looks like. And you can see how the cycle created the inverted head and shoulders. And then when it broke out, it came right up to the measurement that you could see right over there. It made that measurement. So that was, expected based on what we're seeing in here. So now that
I could understand how, you have confluence and all the cycles are coming together here, Steve. I'd be interested in how you come up with the magnitude of the move that you may have off those turns.
Yes, well, that's actually a great question. So when I look at, I'm just going to zoom in again right over here. When I look at this cycle right here, from this point to this point, this was about 100% give back of this cycle that you see right over here. The probabilities of getting through resistance when you have 100% give back is probably less than 20%.
Okay.
So what we do is we project through our swing high, swing low analysis, and essentially this is pretty easy because these are just fib retracement levels, 38, 50, and 61.8. And we project out the magnitude of the minor cycle that you see right over here to about the 38.2. So and what we do is we take it down into smaller time frames. And I'm just going to move into a weekly chart right over here on the dollar and blow this up for you. So this is weekly and daily on the side by side. And
I'm so glad I reached out to you. Very interesting work.
So you see that this minor cycle here basically avoided the breakdown. And the fact that this rallied as high as it did was actually pretty anomalous. And it tells you that there is strength in here. So we have our momentum indicator right in here, which is called the reversal scalp. And this is giving you positive momentum. The fact that it did so well coming off of that low basically tells us that this is what we call bullishly configured cycle coming in here. And our upward projections to the resistance levels are basically, that's kind of a channel line there, but it's about 93.80 and very reasonable to get up here to about 94.50. This would be out in October and maybe even up to 96, though I think that 96 level may come out further out here in this next cycle right there. So this is the highest projection I think really we'll see now is about 94.60 in coming weeks in the dollar.
A great work on the dollar, Steve. When I went to your website, I saw you had a video. I didn't have a chance to play it, but you had something, and I think it was from early August, that seemed like it was some type of warning for people that didn't think gravity existed in equities. Did I read into it correctly?
Yeah, we have a Federal Reserve, of course, that is trying to prove that there is no gravity. Because
they've done well.
They've done exceptionally well at it. And when I'll switch over here to look at the SPX, the S&P 500, and what you can see in here, these are the minor cycles right down over here. And this is really the important cycle. These are running about 24, 25 weeks. And you could see this perfect rhythm in here. And the fact that they have gotten this as a from this important low again up this 21 weeks to this high that we have right now is just phenomenal. And this is the period of expected correction in here. And we actually revised, because of the amount of upward momentum, the correction I think that we're going to see between now and sometime in September to about 5.3 to 7.7%. And then likely moving up again to test those highs or higher highs out into the fall time period before I think we get into a very risky period coming up for the stock market, well into potentially into 23. We've shown a lot of work on our quarterly cycles, which show a decline, a bear market coming well out into 23. Based on the configurations of these patterns that we're looking at in here, it is extremely unlikely that a bull market peak is happening. It's much more likely you get some kind of a minor correction and then another rally out into the fall. And you see this big cycle right over here. This one, you can see the date points out to 2022 in June. So that's probably more like a bear market low that's coming out there, or some severe decline into 2022. Okay. So we have this analysis and going all the way down to 15-minute live charts for our members, all the way up to our monthly analysis.
Okay, is it proprietary? We have a attendee asking how your cycles are derived. Do you teach people that, or that's proprietary?
We actually do. Is it okay if I pull up my website here?
Yeah, sure. I want you to.
Okay, so there's our website right there. And if you go into the workshop category, workshops right here, you'll see the cycle analysis workshop. And I started to do this work back when I read the book Profit Magic of Stock Transaction Timing by J.M. Hurst. And I have since developed that into a workshop. There's you can see we have a workshop on there, which is 20 video modules. I have a video on here that explains it. And here is the whole table of contents on those 20 video modules. So you can just invest in this. And it took me 2 years to write and over 6 months to produce. So this is really about learning cycle analysis right there. And we have many, many things on our website that you can learn about. I'll just pop up the workbench real quick, and we can go back to some analysis if you want. But these are all of the things we have. You can do all of your work and save them on worksheets and all of your analysis. This is this is your trades. We have a momentum tracker that is just phenomenal, which gives all of our proprietary information on a lot of canned groups. So if I just go into here and let's just pull up precious metals, because I know you look for talk about precious metals a lot. I'm just going to go down here and find the precious metals. I'll select that group, and it'll bring up all of our proprietary information. If I click directional bias, it'll tell you which are bullish on long-term, intermediate, and short-term. And you'll notice that there are very few of the stocks that are in the GDX or in the category of gold that are positive. Look at all of these negative readings you see right there. So
I mean, about a month ago, before we finally had this rapid kind of flash crash this week, Friday and Monday in metals, Steve, the bullion was outperforming the shares by a mile. And I know you have some old school stuff. I was taught that the miners should lead, so they should be showing relative strength over the bullion for it to be a bull case.
Yeah, actually, you would see normally that they do lead because money starts to flow into the equities first. But here's our analysis on the GDX, and that actually points to a decline out into October, and a best case testing that low. So, I mean, this is probably a conservative analysis in there, and it could actually break. So this is a bad picture on the weekly cycle analysis for GDX.
Okay. All right. I concur. You do anything with, everyone's saying that we're in a commodity super cycle. Obviously, the metals aren't saying that at the moment, but being from Chicago and, the Board of Trade, grains had hell of a run. And I'm wondering if you're following some of the other commodity markets.
Well, the
and
grain
the
market
pullback.
right over here. Here's corn on the weekly chart. Let me
Yeah.
just get the correct analysis up here.
Okay.
And this is looking like it's in a rebound and what will be a continued downside. It was,
Right.
you know, you had this massive upside move, and you can really see the cyclic patterns in here and how you had that base cycle right there. The configurations of cycles is very important when you get higher highs and higher bottoms, and they come down and hit the support areas. And when you get swamped conditions where you get declining phases that can't tick down because the momentum is so strong, that's the reversal scout. That is just gives you the important information you need. Here's another positive cycle. And look at this, a negative cycle after that big move, momentum in negative condition, a bounce going right over here, but it's really saying the corn market is fairly weak. But when you switch this over and look at the wheat market gives you a different picture. Actually, the grains are very out of sync right now. And the wheat market is much stronger. Let me just get the correct analysis right here. And the wheat market, you see, had a much bigger rebound. So this is calling for a pullback, like, and maybe in the same time frame as corn, but you'd be buying right over here in these support levels that we have, assuming it got down there near these where this low is projected out over here in October. Then after that, if it held in there, then the next cycle rising phase would come in and we would be projecting it up that way. So this is all money flow. You know, it looks like a bunch of lines, but when you really get familiar with it, you really get a good sense. I might as well put up the soybean market because you asked about the grains. And here is soybeans. Let me just get the analysis.
Appreciate the look, Steve. You know, I have another question from an attendee. Are your cycles similar to GAN in any way?
No, they're really not.
Okay.
GAN is different.
Go, Hannah.
Yeah.
Okay.
Really, and they're not like Elliott Wave either. You know, they're really very unique. And you can see in here soybeans getting ready to bottom and get a bounce in there. So, but again, it's probably not a great pattern. It'll hit resistance and move down. What else do you want to see in our last few minutes? Anything?
Okay. Well, thanks for the segue.
Yeah.
And, you know, I could tell after talking to you for 20 minutes, Steve, that you'd be a great mentor for anybody. And,
yeah, I don't do a lot of coaching right now. My main focus is I'm finishing up a book that I'm writing, and that's going to take some time on trading and my history and trader history brought into it. So it's but
I didn't talk much about your history besides your trading background. Are you a Bear fan?
Yeah, of course.
Even though you're in Florida?
I'm a Bear fan, but you know.
Okay. Where'd you go to high school?
I went to Von Steuben.
Okay. I know it. I went to Niles North.
Oh, you did? Yeah, a bunch of my family went to Niles North too, in the Skokie area.
Yeah, okay. Graduated in 71. Where'd you go to college?
I went to Southern Illinois University of Illinois.
You were a partier.
I didn't stay long.
Yeah, because you were too busy having fun.
I was too busy deciding that I could do it on my own. I didn't need teachers.
All right. Well,
some of that wasn't smart, but you know.
Okay. So, you know, I went to school in DeKalb. So really was a pleasure meeting you. And, you know, if you survive an interview with me, you know what you become? My trading warrior brother. You are now my trading warrior brother, Steve Miller.
All right, great.
And you could follow Steve on Twitter at AskSlim. And your website address one more time, Steve?
It's slim at AskSlim.com. And we have a ton of YouTube videos, so they should just come and follow me on YouTube and they get a good flavor for what we offer.
Okay. Well, you know, I hope that pips continue and rain down on you and all the people your teachings touch. And I'm a fan.
Thanks. That's very kind.
All right. So thank you for taking time out of your day to be here. Good. I hope you get some action.
Yeah. Thanks a lot. Take care.
All right. Steve Miller, everybody.
See ya.
And we just disagree, right? Steve Miller. All right. So that's a wrap, everybody. And I'm glad you guys enjoyed it. Jays, Gordon, everyone. And we'll see you tomorrow for TGIF. Adios. You're very welcome, Hugo, Sinatra, Monica.